Okay, let's unpack this. We are starting today with a really high-stakes corporate transformation. It's reshaping one of the biggest names in the payment industry, Global Payments, Inc., or GPN.
And this isn't some minor reorganization?
No, not at all.
Oh.
This is a fundamental multi-billion-dollar redesign of the entire business.
It really is a seismic shift. GPN is trying to transform itself into a pure play leader in merchant solutions, just one thing.
And that means shedding huge parts of their old business and, well, acquiring an even bigger new one.
Exactly.
The scale of what they're targeting is what just jumps off the page of the documents we have. So our mission today is to give you a clear understanding of this whole strategic overhaul. We're pulling key insights from a recent research report by Compasscope and, of course, the company's detailed Q3 2025 earnings call.
Yeah, and we're going to need to analyze GPN's new business model, really dive deep into the competitive landscape they're moving into, and, dissect this enormous growth strategy.
And crucially, we have to spend time on the execution risks because those stakes are just incredibly high.
They are. This deep dive is critical for understanding that pure play vision. I mean, can GPN actually manage the immense complexity of integrating such a huge acquisition like WorldPay?
While delivering on some very ambitious promises.
Right, promises on synergy, on debt reduction. We're looking at the blueprint for high growth, but also, the blueprint for very high risk.
Let's start with GPN's core identity. For those of you who track this space, you know GPN is a leading payment technology and software company. They provide what they call commerce enablement solutions.
Which really just means the tech that lets businesses, mostly small and mid-sized ones, actually accept payments from you.
And their operational engine is something called the Merchant Solutions Group. This is where the money moves.
Yeah, they focus heavily on acquiring services. That's the foundational work, of enabling credit and debit card acceptance in store, online, mobile, wherever.
But the competitive edge seems to be moving away from just those transactions and more toward proprietary software. And that's where the Genius platform comes in.
Genius is absolutely foundational to their whole strategy. It's their customizable cloud-based point-of-sale solution.
So it's what the merchant uses at the checkout counter.
Exactly. But what makes it powerful is that it's modular, it's scalable, it lets GPN tailor the experience for really complex, high-growth areas. Think restaurants, healthcare, education. It's not just a card reader. It's more like an operating system for the business.
And beyond that, direct POS offering, they also focus on something called integrated and embedded payments.
Right, and this is where they partner with ISV's independent software vendors to basically bake their payment processing directly into whatever specialized software a merchant is already using.
So if you're a dentist using a specific patient management system.
The payment part is just invisible. It's integrated. And that integration is crucial because it makes GPN incredibly sticky. The switching costs for that merchant become, extremely high.
And then they bolt on these value-added products, right? Like AI for fraud management, data analytics.
Exactly. And integrated loyalty programs. They're setting up to use the massive transaction volume they're about to acquire to fuel the intelligence behind all of those tools.
Okay, now let's address the elephant in the room that really defines this transformation. The move to that pure play status. The sources highlight this big, ongoing divestiture of the Issuer Solutions Group.
That divestiture is really the definition of the whole strategic trade-off. Issuer Solutions handles things like card issuing and processing for financial institutions. It's the back end for banks.
A totally different business.
A very different business. It's stable, sure, but it's lower growth compared to dealing directly with merchants. By selling it off at the same time they're making this massive WorldPay acquisition, GPN is making a clear statement.
They're all in on merchants.
They're all in. They basically traded stability for focus.
That focus makes sense, but the merchant payment industry is brutal. It's so competitive. Where does GPN even sit among the heavy hitters?
Well, GPN has carved out a very specific position, the mid-tier SMB segment.
Mid-tier. So what are we talking about here?
We're talking about businesses doing roughly, say, $500,000 to $600,000 in annual payment volume. That's their sweet spot.
Okay, so it gives them a defensive layer.
Sure.
They avoid the huge enterprise fights, but they're also not in the super crowded micro merchant space where, block is king.
Precisely. And their competitive advantages start with that stickiness from Genius. But the real game changer is the sheer scale that comes after the WorldPay deal closes.
Right, because the documents project that they're acquiring volume, the total dollar amount of transaction they process, is going to jump from $1 trillion to, what was it?
A stunning $4 trillion annually.
$4 trillion. That number just sounds astronomical.
Mhm.
But for you listening, why does that scale matter so much in payments?
Scale in payments is power. It unlocks massive cost synergies by consolidating technology, and it gives them huge pricing leverage with the card networks. It's the engine for both cost savings and their ability to attract bigger clients.
But even with that jump in scale, they still have less than 10% of the domestic market share.
Exactly. So the room to grow is still enormous.
But the Compass Scope report does highlight some big challenges from their peers. How do they really stack up?
If you compare them, the limitations become pretty clear. Look at a company like Fiserv. They have stronger overall scale, deeper enterprise capabilities, thanks mostly to their Clover POS system.
GPN has the mid-tier niche, but Fiserv can go bigger.
Right. And then you have Adyen, which is just dominant in that enterprise and e-commerce space with, arguably the most advanced technology. GPN is just less competitive in that really high margin segment.
So the conclusion is that while GPN's mid-tier focus is strong, the pressure from Fiserv and Adyen really restricts their ability to just easily expand into those broader, higher margin markets.
That's the perfect segue. Because to overcome those limits, GPN is deploying this really aggressive, multi-pronged growth strategy.
This is where it gets really interesting. Their whole plan is built on three massive drivers. And it starts with the WorldPay acquisition, which is designed to unlock those immense synergies.
And that synergy target is the core financial reason for the entire deal. They're targeting $600 million in annual cost synergies.
Which means shutting down data centers, consolidating platforms.
All of that. And on top of that, they expect another $200 million in revenue synergies by cross-selling GPN solutions, like Genius, into WorldPay's huge existing client base.
So that's an $800 million annual boost. That's the promise to shareholders.
A huge target, and it requires flawless integration. Which brings us to the second driver, the aggressive expansion of the Genius platform. They are turning Genius into a global product.
The Trojan horse, as you called it.
Absolutely. They're aggressively expanding it. The Q3 earnings call confirmed Genius is already being rolled out in the UK and Austria, with plans for Germany, Ireland, and other key markets in early 2026.
And to speed that up, they're hiring 500 new field sellers.
A huge investment in people. And it isn't just about targeting those mid-tier SMBs anymore. The document showed Genius is making some serious inroads into the enterprise world, which is a major shift for them.
We saw some of those wins in the Q3 call, right?
We did. Big wins, like integrating Genius across all the food and beverage locations at the Prudential Center, that's home of the New Jersey Devils, and securing over 400 locations with quick service restaurant franchisees. They're consciously pushing the platform into rival territory.
Okay, and the third driver is capital deployment. They're committing to reinvest $1 billion a year into innovation, but the market really loves the aggressive capital return program.
Oh, absolutely. They're targeting $7.5 billion in stock buybacks between 2025 and 2027.
That's a huge signal of confidence from management.
It is. It tells investors they believe the stock is undervalued. But it also makes hitting those $5 billion free cash flow targets absolutely essential. The whole blueprint is compelling, but it all comes down to execution.
Which naturally leads us to the risk. If the reward is massive, the risk has to be just as big. And Compass Scope clearly views GPN's execution risk as higher than their peers. Why is that?
It's compounded complexity. I mean, the WorldPay acquisition is large and inherently difficult to integrate, but WorldPay is also going through a turnaround itself.
So they're not just integrating a company, they're integrating a company that's already facing internal challenges.
While shifting their own focus to a customer segment they don't know that well.
Exactly. GPN has pretty limited experience serving these massive, large merchant enterprise clients, and now they are suddenly responsible for them.
And their financial flexibility is a bit constrained, at least at the start.
For sure. Post-acquisition, their leverage, so their debt relative to operating earnings, is expected to jump to 3.5 times debt to adjusted EBITDA. That's a lot of debt. It limits their ability to make future acquisitions or, cushion themselves if there's a recession.
And we keep coming back to that initial vulnerability, the SMB exposure. Right. Small merchants are just far more sensitive to economic downturns and inflation than large enterprise clients. When inflation hits, the local coffee shop tightens its belt immediately. That means more revenue volatility for GPN. And finally, the whole growth story relies on the unproven scalability of Genius into these new international and large enterprise markets.
That is a high mountain to climb. But the good news is we have recent hard data from the Q3 2025 earnings call that suggests GPN is navigating these early stages pretty well.
They are. And first, the timeline is solidifying. After getting that critical UK regulatory approval, the WorldPay acquisition and the Issuer Solutions sale are now both expected to close in Q1 2026. Predictability is key for market confidence.
And financially, they're showing strong momentum.
Very strong. The Q3 results showed accelerating revenue growth of 6% and adjusted EPS growth of 11%. But here's the critical part. They dramatically reduced their leverage faster than anyone expected, hitting 2.9 times at the end of Q3.
That's huge. That's actually below their target of 3. Why is hitting that early such a positive signal for you listening?
It proves financial discipline and operational success before the huge deal even closes. It's GPN signaling to the market that they are reliable stewards of capital, which drastically lowers the perceived financial risk of the entire WorldPay deal.
It shows they can actually deliver on their promises.
It really does.
Okay, let's focus on the Genius platform's success metrics, because that's the internal engine that's supposed to drive those revenue synergies.
And the early metrics are extremely strong. They're focusing on the front book, that is, new customers. And 90% of Genius sales are being made there.
And this new business is ramping up successfully.
It is. Monthly recurring revenue from new sales is up 75% just from June to September, and the average deal size has more than doubled. This proves the product has market acceptance beyond their traditional small client base.
The sources also highlight some big wins on the operational side, specifically with their sales team.
Yes, the sales transformation is working. They shifted the compensation structure from 100% commission to a base pay plus commission model. The result, a double-digit increase in signed annual revenue per deal and, crucially, a 50% reduction in new higher attrition in that sales group.
So they're keeping their best people.
Which is essential for driving that aggressive Genius rollout.
They also mentioned a partnership with Google for something called agentic commerce. That sounds like pure corporate jargon. What does it actually mean?
That's where the $4 trillion in transaction data becomes a weapon. Agentic commerce just means using AI-powered data discovery. Instead of just giving a merchant a spreadsheet of data, GPN uses its massive scale to fuel AI algorithms that offer actual advice.
Like what?
Like predictive fraud tools, automated inventory suggestions, or even loyalty program optimizations, all delivered through the new merchant dashboard. The AI is acting as the merchant's agent. You just can't do that effectively without GPN's massive scale.
So they have great internal momentum, they have financial stability, but they're about to run headfirst into a massive, complicated integration. In our final analysis, what are the top keys we need to watch based on that Compass Scope ranking?
Well, the report distilled 18 factors, but 3 really stand out as the critical monitoring points for you, the listener.
Number 1 being the most important. WorldPay integration execution.
Absolutely. Any missteps here could negate every single financial benefit they've worked for. We have to watch for tangible, verifiable progress on realizing that $600 million in cost synergies.
Not just announcements, but actual platform consolidations.
Exactly. And their successful transition into those large merchant segments.
And number 2, the Genius platform itself.
Genius platform penetration. You need to monitor the adoption rates and specifically the success of those geographic rollouts. How well is Genius really competing against incumbents like Fiserv's Clover in new markets like Germany and Ireland? That's their organic growth story.
And finally, that specter of macroeconomic risk hasn't gone away.
Not at all. Macroeconomic sensitivity. GPN is so heavily reliant on SMB transaction volumes. If consumer spending slows down, it directly impacts GPN's revenue far more severely than it would ADN or Fiserv. And we also have to track their free cash flow generation, that $5 billion annual target by 2028, to make sure they can fund that buyback program without taking on new debt.
So this all boils down to one core tension. GPN has the financial blueprint for success, the WorldPay scale, the $800 million in synergies, the proven Genius platform. But the physical execution, that's the real test.
That's it. The execution of that complex integration and getting market acceptance in new places will determine if GPN can actually manage this newly elevated risk profile.
We've seen the clear blueprint for high growth and massive shareholder returns.
Yeah.
But the sheer scale of the integration and the shift into large merchant acquiring territory is it's unprecedented for this company.
So, Here is the provocative final thought for you to consider. GPN is leveraging the WorldPay acquisition to achieve unmatched scale in a segment where scale matters most. But for a company that built its success in the defensive mid-tier SMB niche,
Right.
will the aggressive pursuit of higher-margin enterprise clients, where Adyen and Fiserv currently dominate, prove to be GPN's greatest catalyst, or its largest operational headache? That is the central question for GPN's future in global payments.
Excellent deep dive. Thank you for guiding us through this and making
Yeah.
those complex metrics so accessible.
My pleasure. It's a fascinating case study in strategic corporate evolution.
And thank you for joining us for the deep dive. We'll be back soon with more of the knowledge you need, faster than you thought possible.
This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.